Welcome back. Now, in this episode, I'm going to answer your question, what are tax sale overages? Now, you're going to find this interesting. I mean, really, it's definitely interesting. Sort of irritates some people, makes other people jump up and down with joy. It's a profitable business when you understand tax sale overages. And what that really means, basically, is that someone overpaid at the auction. In other words, the back taxes were $20,000 or $30,000, but someone paid $100,000 for the property. It might have been worth $400,000 or $500,000, so they got a good deal. But the difference between the taxes and what was paid is the overages. So let me give you a little background about these tax defaulted auctions, and you'll see that this really works. Now, my name is Ted Thomas. I've been involved in this business for about 30 years. I started as an investor, started out just buying tax deeds and tax lien certificates. Then I started mentoring people, coaching people, and what have you. And before you know it, we had courses to teach people how to do it. And I still practice this business today. Now, in the next few minutes, I'm going to take you through what tax defaulted properties are, and I'll show you about what are tax sale overages. So stay tuned, I'll come right back. Okay, what do newcomers know about this? Well, not a lot, but you're going to get surprised. There are people that just practice tax sale overages. So we're going to learn about the tax lien and the tax deed business, and I'm going to give you a whole bunch of surprises as we talk about tax sale overages. Okay, now the marketplace is just basically filled with information, all right? But the hidden gems that you want to find are out there, but you'll have to go to a few auctions and you'll have to learn how to research to find them. But there's going to be 5,000 tax auctions this year, 5,000 auctions nationwide. Some counties will have multiple auctions. We're going to talk about that. Let's talk about, first of all, a little insight on tax liens and tax deeds. So what I'm doing is I'm going to actually answer the question on overages, but you need to understand the ordinary person that's buying it at a tax auction, they're just happy to get a property. The ordinary person that goes to the sale doesn't realize if there's money left over, the county's going to keep that money. So starting with just a little bit of history and a little bit of background on this, the United States has over 3,000 plus counties. The map you're looking at shows all of those counties. Every one of those counties is a taxing jurisdiction. In addition to that, along the East Coast, from New Hampshire and Vermont on down to Georgia, there's an additional 1,400 municipalities. They're all taxing districts, and they all have the ability and the power to take over properties when people don't pay taxes. Now, all of these governments I just showed you, all of them need money. They need money for lots of things. They're not only going to have to pay for the sheriff and the police department, but they have to pay for the fire department and school teachers and so on. So they have a lot of bills to pay. So how do they get money for that? Well, what they do is they take money from the property owners. So if you own a property, it's mandatory that you pay a property tax. And if you don't, you will have to forfeit that property to the county. Now, I didn't create the law. I didn't create the statutes. They're all created at the legislature level. So the government at the state level creates all the rules. Then they pass it down to the Board of Supervisors and the county commissioners. We're discovering now that the government needs a lot of money, that they're going to get it from the property owners, and that there's going to be a property tax due on every property. Nothing new about this. It's been going on since the colonies. They've always had the government in the need of money, so they can pay the government employees, and in many cases now to pay the firefighters and the police and the schools and the court system and the jails. The county really has an awful lot of bills to pay. Now, the alternative, when you don't pay the tax, is that you're going to lose the property. Now, what do I mean by that? I mean, if you don't pay your property tax, the local government, by that I mean the county sheriff, the county treasurer, the county tax collector, they have been authorized to seize your property. That is, confiscate your property. Now, unfortunately, they can't pick it up in a truck and haul it out of there, but they certainly can take possession of it, and that's what they do. If you don't pay taxes, you forfeit your property to the county tax collector. All right, now these taxes are determined by the local tax assessor. The county officials join in with them, and they charge taxes to every property. You should be paying your fair share. So most people are on the honorable tax roll, as they call it. They call it the tax roll. All right, but there's a whole bunch of people over there on the default list. Now, if they're on the default list, they're going to get a couple of notices. That notice will be a notice of default, and it will explain the consequences of not paying. So if you don't pay, guess what? They're going to do something about it. They're going to confiscate that property. All right, now when they confiscate the property, they actually don't even want it. They don't want the property. They got all they want. So what am I answering in this particular episode? I'm answering the question, what are tax sale overages? So when they confiscate the property, what they're really going to do with that property is they're going to put it back on the market. They're going to recycle it from being on the default list. They're going to have an auction. It's going to be a public auction. Anybody can go to the auction. Anybody can bid at the auction. And the starting bid, generally speaking, will be the back taxes. Now, I didn't say it was the property value. I said it's the back taxes. Now, if an auction starts at the back taxes, wow, that could be pretty low compared to the value. So when that property sells at auction, the mortgage is deleted. It's wiped out. It's cleared from the official county records. So you possibly could get a property at auction for somewhere close to the back taxes that had giant equity. In other words, the market value was much higher, and it had no mortgage, because the treasurer and the tax collector, they have the power to wipe out the mortgage. So this is real estate where the local county is trying to collect money for property taxes. The taxing district can be the county, there could be a municipality, but they're going to collect those taxes. All right, so the honorable roll is people that pay their taxes on time. The default list doesn't produce any money for the county. So in all of those counties, there's going to be an auction. So every county is authorized to have an auction, okay? The tax collector has power. What do they have power to do? They have power to seize, to take it away. And they'll send you notices. That's going to be a default notice, due process. If you don't pay, you're going to lose that property. All right, now there's plenty of property owners that do not pay taxes. How could we have 5,000 auctions every single year if people pay their taxes? Well, lots of people don't. So you can expect 2.5 million people in the course of the United States, property owners, will have some kind of tax default situation on the hand. So there's millions of these, and the government's going to do something about it. So I don't levy the tax. The local district does that. The tax collector and the treasurer, they number one, levy the tax, then they're authorized to collect the tax, and they're also authorized, if they can't collect it, to issue a notice of default, and the consequences are they take the property. All right, so that's the local government taking private property, non-payment of taxes. All right, now what are they going to do with that property? Well, after they've done the eviction and got the people out, they have now taken the property, at least theoretically they've taken. They can't move it like the pickup truck would do, but they own the property. They put it out for auction. It's a public auction. It could be online. It could be at the county courthouse. It'll always be advertised in the newspaper. It'll be advertised on the county website. This is all public knowledge. You just have to learn how to do all this. Now, when they start the bid at that auction, when they start that bidding, it's going to start at basically the back taxes. All right, so the auction process is the local government returning a defaulted property back to the tax roll with a new owner. Okay, so it's the local government selling the property. Now, what do they want? They definitely want the back taxes. But what are we talking today? We're talking about tax sale overages. So when they put it out for sale, it's a competitive bid situation. So let's say it's a $400,000 house. Well, if they put it out for $30,000, there's going to be a lot of people who want to bid on that house. And there's going to be some people that will want to pay more than $30,000. All right, well, what happens? Well, the auction takes place, and what if someone bids 20 cents or 30 cents on the dollar? Well, 30 cents on the dollar, when it comes to a $400,000 property, could be a lot of money. So it's a tax deed auction. The property is what the value is, and the bid is whatever the bid is, but it's going to start at the back taxes. If someone pays more, there's a massive amount of overage is going to be there. Now, if you watch a lot of late night television, you're going to hear people explain, oh, we got properties for 10 cents on the dollar, 5 cents on the dollar. I'm not saying that doesn't happen, but if you go back and look at the property that you just saw, your chances of getting that one for 10 cents on the dollar are slim and none. Why? Because there's going to be other bidders, and other bidders might be willing to pay 30 cents on the dollar to get a beautiful $400,000 home for $120,000 or whatever that bid price might be. The point is, the money over and above what the tax collector asked is called tax sale overages. All right, so now let's review. All right, we have learned, basically from my experience, that these properties are going to be sold for 25 or 30 or even 50 cents on the dollar. Well, 30 cents on the dollar, and this is a $400,000 property, is 120. Well, a whole bunch of bidders are now gone because they don't have the 120. All right, so if you bought that for 120 and the value of it was somewhere around, the tax amount was somewhere around 30, you're getting the idea. All right, so what happens? I don't know. So what are tax sale overages? Let's think if this property had a starting bid of $30,000. However, someone come in and paid $130,000. And just to make the math easy, it's very easy to see there's 100% overbid on this property. There's 100,000 overbid. So let's look at that in graphic form so I haven't totally confused you. A tax deed auction with overage. Property sold for $130. The back taxes were $30. So there's 100,000 over. Now ask yourself, what happens to that 100,000? The treasurer took in all the money. The new property owner's happy. They got a great bargain on a house. They're really happy. Okay, now the auction's over. Everybody goes home. What happens to the 100,000? Well, I could just about assure you, that nothing's going to happen. You're going to ask yourself, what happened, Ted? What happened? Well, the county's probably going to go silent because to my knowledge, I have never known a property owner to go back and try to find that property owner that was due that money. The money is held by the county or the municipality. They have now got a $100,000 gift. And if that property owner does not come forward and demand and request that $100,000, that money will escheat to the county. Now, just because I said a fancy word does not mean I'm an attorney or a CPA or a real estate broker. I'm just a guy that makes a business of buying tax defaulted property, and I'm a prepared investor for these auctions. And a sheet simply means the county's going to hold that money. If nobody claims it, the county and the state are going to keep that $100,000. Now, auctions are taking place all across America, and many properties will sell for more than the back taxes, and that money goes to the county. And if no one steps forward and demands that money, the county's going to keep it. Now, folks, I don't make the rules. I'm not an attorney. I'm just a red-blooded capitalist. Here's a book that says Public Records Guide. And the Public Records Guide is one that tells all about the public records. And in my past, you don't know this, I've been teaching classes on it for years, I would take people to public records so they can understand it. But the public records tell all the things that the public records people are allowed to do, good and bad. They're allowed to keep this money if nobody steps forward. All right, so the point was, someone is going to figure out that there's $100,000 there, and most of these properties, when you buy them, will be abandoned. So that means the property owner just abandoned it, yet there was $100,000. Now, you wouldn't abandon $10,000, let alone $100,000. All right, so if that property owner knew the money was there, they would probably go and get it. So there are people that take the time to find those property owners, and then they make a deal and they share the wealth with them together. So you're kind of getting the idea. This has been around for a long time. Overages will take place at many tax defaulted auctions. If the overbid takes place, the treasurer takes the money. The property owner that just bought the property is very happy. Okay, the property that was owned by someone else, they might not be so happy, but they don't know, and they don't come back to collect it, so the county keeps it. Now, my name is Ted Thomas. I've been doing this for about 30 years. I can't tell you everything about tax liens and deed properties, but I can tell you right below me is a free gift, and you could learn a lot from that. I'll see you on the next video.